Good morning, everybody, and welcome to this fabulous event we have today, brought to you by MST Access in conjunction with NWR Communications. I'll be your host, Peter Taylor, and Chris Drew, the Senior Analyst, MST Access, will take us into the opening of this morning's event. We've got 5 great emerging copper stories to get through. There will be videos available for distribution once we've completed this and got those ready to go. I'm going to hand it over to Chris to welcome you and introduce our first presenter. Chris.
Thank you very much, Pete. Thanks for that, and good morning, everyone. Thanks very much for joining us today. I'm Chris Drew, one of the metals and mining analysts with MST Access, and delighted to be working with Pete and the team at NWR Communications to bring you our next generation of Copper Juniors Forum. Good day for it today, with copper in the US looking like it's pushing up through $5 a pound. So you're going to hear from a range of companies today, and we think they each offer significant upside that will be delivered as the market awareness of these names continues to grow. And I'd like to thank each of the speakers from our companies for joining us today. We've got pretty much the full Lassonde curve covered here, from earlier stage explorers at Southern Hemisphere mining, then into some more advanced development opportunities with Orion Minerals and Cyprium Metals, each of whom have compelling brownfield opportunities that are working through mining studies at the moment. Then we've got Hillgrove, who are in production. They've done a great job getting Kanman 2 ramped up. And rounding it off, we've got Xanadu Mines, where there's an attractive corporate angle rapidly advancing around this Hemisphere project in Mongolia. So hopefully we've got something for everyone joining us today in that mix. Before we get into the companies, I'd quickly like to take the opportunity for those of you who are a little less familiar with MST to give a brief introduction to who we are, and then I'll set the scene a little bit with some high-level thoughts on why we think copper is a great space to be looking for mining investments. So MST Financial, we're a research-driven, full-service financial services platform. Our research comes through 2 primary platforms. Firstly, our institutional research, which is provided under our MST Marquee and MST Emerging banners. And secondly, we have our company-sponsored platform, which is with the MST Access team. The MST Marquee and MST Emerging are our large cap, mid cap equity research coverage platforms. We've got around 14 analysts covering 120 stocks there. Of those analysts, around 8 top rated in their sector. That's a leading amount of top rated analysts across the banks or brokers on the street here in Australia. And in MST Access, we've got a team of around 9 analysts. Most of us have 15 to 20 years in equity markets. We're covering around 85 stocks, typically in the smaller cap space. So we certainly lead with that research product, but alongside that, we have a full suite of equity sales and equity and debt advisory services. Business was set up in 2017, fairly small team back then, but I think it's fair to say it's been a real success, reflected in the significant growth in the business and the team growth in the team since startup. We now cover more stocks than any other bank in Australia. We've got the most top-rated analysts, and I might be a bit biased, but I think we've got a leading team of analysts across the street. So for more info on MST, and if you want access to all the MST Access research, just head to our MST Financial website, and it's all available there. Now, turning to our commodity theme today, copper remains one of our preferred exposures across the commodity spectrum right now. We see a number of themes playing out to support this, and I just want to hit a few of those at a fairly high level today to set the scene for our speakers. Firstly, we've got the mega trends really of decarbonisation and electrification. What's important to note here is we're not just talking renewables in terms of key copper demand drivers. Whether you're building gas, coal or nuclear, you're still going to need plenty of copper. And furthermore, given the volatility we're seeing in some of the sentiment towards clean energy and renewables right now, it's important to note it's not just a function of kind of Western pro or anti-renewable politics that's going to drive this demand. We've got 7 billion or so people out there that are all ultimately seeking better access to energy and electricity to match the relatively more fortunate sort of 1 billion of us in the West. So those longer term demographic drivers are going to continue to underpin strong demand for copper into the medium and longer term. Looking a bit more specifically on the energy transition, this chart shows the composition of copper demand under various energy transition scenarios. And again, the read-through here is the transition in any form is undeniably going to be positive for copper. If you're less positive on the direction of the energy transition, the IEA stated policy scenario, that's the steps bars on the chart you see there, still sees clean energy demand for copper, lifting from around 24% currently up to 34% of copper demand by 2030. If you think the announced pledges are going to be delivered on, that's the APS scenario we can see there, that number lifts to 39%. So we're clearly going to see a step up in demand for copper from these trends, even under the more conservative sorts of scenarios that are out there. The next angle on demand I'd like to touch on is data centers and AI. This is emerging as an incremental source of new copper demand. And currently data centers are only something like, well, below 1% of copper consumption, but at reasonable levels of copper intensity and growth in data center capacity, we could see that lifting to 2.5% to 3% of demand over the next decade or so. If we look longer term, BHP sees that data center and AI copper consumption lifting to 9% of demand by 2050. And remember, that's just the copper in the data centers. It's not copper that's going to be needed for the associated power supply or infrastructure. So this is an incremental source of new demand that just further adds to the medium-term pressure we see coming in copper markets. Now I'll touch on the supply side of the equation. Here there's some perhaps more established trends that people might be familiar with, but they still remain pretty important to the outlook here. The first chart shows that we're simply not discovering as much copper as we used to. And that's exploration, so it could change, but the trend over the last decade or so is fairly clear. Since 1990, of the 239 discoveries of copper deposits containing over 500,000 tonnes of metal, only 4 have come in the last 5 years. And furthermore, of those 239 discoveries, only 15 have actually moved past the study phase into construction or production. So that then means we're increasingly relying on the existing mining operations to deliver more copper. Here, the chart on the right shows that growing that production from the existing mining base is going to be challenging given the grade decline we're seeing from existing producers. The growth then needs to be driven by expansion, and we all know what's happening to capital and operating costs for that, and in turn what that means for incentive prices. But from a supply perspective, the pressure firmly remains on for copper. Now, obviously, there's plenty more going on in the copper markets. We could talk about the demographics, India's intensity of use being half that of the US, talk about ongoing growth in EV penetration. In the shorter term, there's supportive inventory dynamics, positive implications of the negative treatment charges for producers, that sort of thing. But to wrap it up, and what I want to leave you with today is that for a very long time, probably most of the 2 decades or so I've been looking at the space, we're pointing to supply side constraints as drivers of the copper price. In more recent times, we've now got these demand side drivers taking hold: decarbonisation, electrification, now data centers and AI. And that's a key change that should see copper demand decouple from its historic GDP plus or minus sort of level growth rates. That's going to result in medium to longer term tightness in the copper space. An ideal scenario for commodity prices is supply side constraints running into strengthening demand, and that is largely the setup we see in copper. So I'll wrap it up with that. Thank you very much, everyone. I'll hand it back to Pete to introduce our first speaker today. Thanks very much, Pete.
Thank you, Chris. Good summary and sets the scene very well for the day ahead. And I'm going to hand it over here to our first guest speaker this morning, CEO and Managing Director of Orion Metals, Mr. Errol Smart. He'll be giving us a rundown of 2 of their projects, brownfields projects in South Africa. I'll hand it over to you, Errol, to load up your presentation and take us through the opportunity that is Orion Metals.
Yeah, thanks a lot, Pete and Chris. And that's Orion Minerals, if you guys go looking for us, not Orion Metals.
Sorry about
that. No problem, Pete. It happens commonly. So, normally we just flick through these disclaimers, but given that we've got 2 feasibility studies coming out in the next fortnight, I'll just draw extra attention to it. And if I do inadvertently drop some number because I'm so engrossed in the figures at the moment, it's aspirational. It's not fact yet. It'll only be fact when it's published on the ASX. So about the company, 110 million Aussie dollar company, dual listed on the ASX and the JSE stock exchanges, fully fungible shares, so shares can move between the 2 exchanges. About 50% sit on the two registers. It's about an even split between the ASX and the JSE, but about 89% of all of our trading actually happens on the Johannesburg Stock Exchange. So our price determination is really happening in South Africa. 45% South African shareholding, 30% European shareholding, and of course, Tembo Capital and Delphi are our 2 biggest shareholders. They're the 2 private equity funds that many of you will know very well. Tembo with John Hodder sitting in Brisbane and an office in London, and Delphi, or the German private equity group. And then Australian shareholders still make up 21% of our register. A board, a very strong, powerful board. Dennis Waddell was very well known in the Australian junior market. Godfrey Gomwe, who's sort of most of his career has been spent in the Anglo-American stable, and he's been CEO of Anglo Coal in the past. Anthony Lennox, also a very well-known name in Australian mining circles, ex-Rio Tinto. And most importantly, he was the MD of building the underground section of Palabora mine in South Africa, which is still a very large producing mine, the only large producing copper mine in South Africa. Patience Mpofu, South African national living in Sydney now, who's a metallurgist and ESG specialist, and Mark Palmer represents the Tembo group on our board. So we set off in 2016, 2017 to create this vision of a producer explorer. So in other words, a producer with a large organic growth perspective. So we spent 4 years consolidating mineral rights in South Africa, doing permitting, doing feasibility studies, and now we're on the point of rolling out 2 DFSs, going through the financing and bringing 2 underground copper mines into production over the next 24 months. The mines are both in the Northern Cape of South Africa. Between the 2 of them, they've produced over 2 million tons of copper. This group on the western side over here, known as the OKIP district, it's an intrusive copper district. It's actually been operating as European mining since the 1660s. So it's a long established group, but really under Newmont from the 1940s, and then under Goldfields from the 1980s until the turn of the millennium. This was a very large copper producing district, and huge remaining drilled out mineralization remains, and that's the opportunity. And at Prieska, also a very important producing district in the 70s and 80s. So OKIP district used to produce between 25 and up to 50,000 tons per annum of copper, and they did that for 5 or 6 decades. And Prieska produced 25,000 tons a year of copper for 2 decades. And both of these we're going to bring back into production, and our aspiration is to reattain the historic production profiles. So that's what we've been working on. Where we're at the moment, a snapshot in time, and this will be a rapidly growing resource base. But at the moment, we've got just on 500,000 tons of copper metal in our JORC resource inventory. We have enormous database of drilled deposits that we are busy modeling, taking through the confidence uplift and actually taking it to reserve status. And the first 2 will be in reserve status with a clear path to development within 13 months for OKIP and within 24 months for Prieska. So the Prieska mine, it's a massive VMS deposit, 2.5 kilometers of strike, down to 1,250 meters. It's a syncline. So there are shafts and decline development right to the bottom of the mine deposit. It used to produce 300,000 tons a month of ore for 20 years. We are planning to take it back to 200,000 tons of ore, and we will have an initial 15 years. But the extensions of this ore body, that red deep sulfide resource that you see, the highest grade and thickest intersections that have been drilled on this deposit are on the margins of that resource area. We have got a lot of upside potential. There are shafts, there are pillars. We're going to start with this brown area at the top in the northwest, which will be a small little 20,000 ton a month milling operation running at over 2% copper. It's a nice little starter mine while we get the deep set up and established. That job will take about 4 years. and then we will take it up to 200,000 tons a year of milling, 22,000 tons a year of copper, and 65,000 tons a year of zinc. The zinc is important. It's a 37% contributor to the revenue stream. There are also important gold and silver credits in the deposit. And we are very aware of the opportunity of pyrite. There's a very clean pyrite that's we actually been bowled over in the market by traders that are actively looking for pyrite, particularly for Indonesia, for the laterite deposits. They need the pyrite, and also an 8% barite. So while Trump wants to drill, baby, drill, there isn't enough barite being produced for the drill, baby, drill, and we will be able to produce 8% barite as a byproduct. So DFS coming out in the next 2 weeks, fully permitted mine site. We've done trial mining. The mine is an established site now. We have the power. We've got 15 megawatts of grid power connected. We are surrounded by solar and wind. We've got processing water pumped from the Orange River, which is 65 kilometers away, in place, operational. We are busy dewatering the mine as we speak, and it's meeting all of our expectations. We have proven now that we can easily manage the water. We've most of the way through constructing a TSF. We've got the key team are in place and operational, and all of our supply chain and logistics are established. It's a fantastic copper development opportunity, this with a lot of growth and resource and reserve growth potential. And that's what we wanted. And when I speak about this resource and reserve growth, this in particularly in the deeps section of the ore body, there are drill holes that were drilled by the Anglo-Vol, who were the previous owners of the mine, that show that the mineralized VMS horizon, this is a true exhalator VMS. So it's a tabular deposit that's been folded. And it's actually, there's two tabular deposits that mirror each other. They have been drilled way out, more than 500 meters away from the current resource. We've got drilling that shows that the ore body continues. We've got geophysics that shows the ore body continues. So the growth potential here is huge. The Okip district, this is a whole cluster of intrusive mafic copper deposits. As I said, has produced over this alone, actually in full history, has produced over 2 million tons of copper, but in European history has produced over 1,500. Listen to me, 1.5 million tons of copper. All of the ochre colors on this are our mineral rights, and that red patch in the middle is actually a mining right. So when we acquired this property, or this group of properties, and it was a consolidation of 6 different owners and groups of properties, there was a mining right application in the center. Now, in South African mining law, once you have a mining right, you've got to proceed to mine development in a very short period. So that has been our initial focus. The deposits within that mining right have been our focus. So within that mining right area now, we have taken 4 of the deposits actually to reserve status. In 2 weeks' time, you'll be seeing it. That's 3 deposits at about a 3-kilometer spacing. We'll be putting up a central concentrator plant and a tailings facility. Low capital intensity. This is in the $8,000s of US dollars capital intensity. So a really strong capital intensity number. Frisca is in that 10 to 11,000 US ton capital intensity number. So both of these very attractive capital intensity numbers. Both of these attract operating in the mid-tier of operating all-in sustaining costs. And unfortunately, I can't say too much of that right now, but you'll be seeing it all shortly. And I think they're attractive numbers. This project will build up to 9,500 tons of copper, and we really believe that we can maintain that for very long and grow it. Importantly, it's to grow it to 2 to 3 times that scale. Why do we believe we can do that? Well, we've got 6,500 drill holes with 860,000 meters of drilling that we have captured. Every one of those yellow dots that you see there are deposits that have been drilled that are on our mineral rights. Many of those have got more than 1 million tons that Newmont and Goldfields called resources and reserves at over 1% copper. The opportunity to expand and extend the life of this operation are really extraordinary. To have such a high density cluster of deposits is unheard of. This entire district is about 35 kilometers east-west and about 30 kilometers north-south. So a very, very strong presence in a very prolific future copper producing district. And with that, I think I'll leave it, and you guys can reach out to us, and we can answer any of your questions. Keep a very keen eye out in the next 2 weeks for two DFSs.
Errol, thank you very much for that. It just reminds me of how much potential there is in South Africa for juniors, where a lot of work is being done and heavy lifting by the majors over the last decades. And you've highlighted two of those great opportunities. I'm going to hand it over to our analysts for a couple of questions. Chris?
Thanks, Pete. Thanks, Errol. Great to hear about the projects. I can't imagine pulling together two DFSs at the same time. So well done getting to that point. Look forward to seeing things when they come out a little later in the month. You've touched on it briefly there. The exploration potential at OKEP looks pretty amazing given all the data you've got, the historical production, the grades and things. I'm sure you're going to be a little bit busy developing these projects in the sort of immediate term, but what is the strategy to sort of get into all that? What sort of time frame do you think we should be thinking about in terms of building up that resource or potential growth pipeline out of OKEP?
Yeah, Chris, look, obviously the full focus has been on the DFSs and getting ready to go into production at OKEP. But we will really be starting with low-hanging fruits. It's the very advanced resource projects that were drilled by Newmont and Goldfields. And by the way, we've had 100% conversion from that historic mineralization in JORC terms. I'm not allowed to call it ore or anything else. The identified mineralization by these small little companies that nobody had ever heard of, Newmont and Goldfields. Wow, most surprisingly, we've actually proved that what they said was there is there. And that's why we've just within 3 years been able to take it from prospecting right applications through to reserve status. We will be starting with low grade, so our operating costs will be higher than normal. But historically, this district produced between 1.5 and 1.9% copper. Now, that's a high-grade copper mine. You were showing those copper grades around the world at the moment. And most of these deposits are shallow. They're from 100 to 500 meters depth. So, and they sort of chunky things. So you can, when you find one of these things or when you bring it on, when you get your primary development in, you've basically established 3 to 5 million tons of ore that can be extracted. So the capital intensity is quite attractive. And that's what we really like about this district. And also very well known, very simple, very easy metallurgy. You're producing a bornite concentrate between 30 and 40% concentrate grades. You could imagine the traders are really banging down our door at the moment with production within 12 months from this.
Yeah, no, great. And then second question, obviously the DFS is coming out, the next step, and sometimes one of the key challenges for the sort of smaller mining companies is funding. You've got a number of partners on board already. What's the sort of thinking around the funding strategy? Will it be using some of those partners? Are there new people that you're looking to get involved? What should we be looking out for?
Yeah, look, it's a combination. It is a reasonably big ticket for a junior miner. These are serious numbers we're speaking about. So we are very fortunate that we've got the Industrial Development Corporation, the IDC in South Africa, who are really the biggest financiers of new mine developments in South Africa. We've built a beautiful partnership with them over the last 2 years. They've put in significant funding into both of the projects. They'll be a 19% equity shareholder in each of the projects. They are also in advanced discussions with our BE partners. We do have our 20% local black entrepreneurs as partners. They are lining up financing through the IDC and other development finance agencies. So that's an important chunk of the financing. We've also got Triple Flag with an $80 million facility that we signed up for Prisca. And offtake related financing, I think around the world at the moment, for the world of junior miners developing mines offtake related financing is really the go. The old world of equity and debt isn't the case anymore. A large part of your financing comes from offtake related finance from the traders and the smelters, and even some of the OEMs looking at getting involved in securing supply. And then, debt isn't just senior debt. You've got a lot of lease finance, OEM finance. We've got 2 build, own, operate, transfer arrangements for the startups of our plants. So there's, shall we say, an emerging new sort of mechanism of financing mines for juniors. And it's not all going to come down on the shoulders of the shareholders and the equity holders.
Right, so lots of options. I think we've got a couple of minutes to spare, so I might get another question, and perhaps probably worth touching on the current state of sort of South Africa, what you're seeing there, kind of politically, how the government's attitude towards mining, how supportive that is, whether we're starting to see changes in some of the national infrastructure. What's for the audience might be helpful to give a little bit of an update on the state of play in South Africa.
Yeah, look, so it's very interesting. We've got a minister that is really pro-mining, and really active, and he's a senior member in the government, Gwede Mantashe. He is promising that we will have our first proper mining cadastre will be released by mid-year this year in June. That remains to be seen if it'll be a fully functional cadastre. But at least we are moving towards it. You can't believe that one of the world's biggest mining jurisdictions doesn't have a proper functional online cadastre. Once that's in place, I think that will unlock a lot of opportunity, because a lot of mineral rights, prospecting rights are tied up in a mess, to be quite honest, of applications, over pegging applications, legal disputes, all sorts of things. I often give criticism. I spend more money on lawyers every year than what we do on geologists, because we've had to make sure that our title is absolutely pristine and clear. And there's very few mines in South Africa that are actually fully permitted with environmental permitting, water rights, social licenses in place, and all of that. So our regulations are designed for a first world environment. The operating conditions are very third world, and the departments are not human resourced or physically resourced to manage mineral title. So there's a lot of talk that that's going to change. There's a lot of talk that the minister is insisting that he will release, that may be coincident on the same day that we release our DFSs, but there's going to be an updated mineral law in South Africa, the MPRDA. The minister says it's designed to be more investor friendly and proactive, and that could bring a lot of attention. South Africa has got an enormous mineral wealth. You just look at these 2 projects, and we've got 3 others like it that, if we had the money in the pocket, we could be building lots of more mines and advancing a lot more projects. The opportunity is huge. We need foreign investment in this country. It can't be all financed out of South Africa, although South African equity investors are becoming more active. As you see, 50% of our register are South African holders. So there is a growing attention. South Africans have heard this rumor that copper is necessary. All of the South African mid-tier and major mining companies are desperately running around looking for copper projects. You can imagine some of the discussions that we're having. So there's interesting times ahead.
Great. All right. Well, thanks very much, Errol. Oops, sorry.
Chris, we just got a couple of minutes while we're setting up the next speaker. I was just going to flag one question with Errol from the investor side of things and the market side of things. Errol, are you seeing a bit of a change from Australian investors' perspectives and confidence in moving into South African resources sector? How is the register looking? Have you noticed any change in that?
Look, I mean, it's terribly sad that only 10% of our trade happens on the ASX, with 50% of the register sitting there. So to be quite honest, it's partly our own fault. We actively marketed in South Africa and less actively marketed in Australia, so nobody's heard of us. This is the start of basically reintroducing Orion to the Australian market and to the European and Middle Eastern market. We're having a lot of very interesting discussions around Europe and the Middle East as well. I will be doing some roadshows with MST through Australia and speaking to everybody and reintroducing ourselves, because I think there's very few of these kind of opportunities available for the Australian investors. I think we need to expose ourselves to it. And the fact of the matter is, copper is where you find it. You know, people invest in copper in Mali, in DRC, in Angola, in all sorts of weird places and difficult places in the world. South Africa is nowhere near as difficult as that. Our human resource skills here in mining are exceptional. Our supply chain is exceptional. This is a mining country. We can do stuff. You know, very often when I bring out, and you know, even Chris has seen, you take people out to see these mines and they say, that's unbelievable. If this was in Australia, you'd be bowled over. What we've been able to achieve on very meager budgets, re-establishing trial mining and carrying out a trial mining exercise in 6 months, mobilizing contractors, re-establishing a mine, going out and extracting 25,000 tons of bulk sample, putting it on surface safely without a single injury. You know, that's anywhere in the world that remains to be done. So I think South Africa has got a re-emergence to come. And I think people getting in at this stage could be getting in at the right time.
And it sounds like you're hitting the streets here with MST, Errol, this time with a couple of DFSs ready this month. Perfect timing, great opportunity, and the prevailing winds of a strong copper price there to help you in that endeavour as well. So thank you very much today for your presentation. And if anybody has any queries or further questions, please email them in to either Chris or myself, Peter, at nwrcommunications.com.au, and we will make sure you get those questions to Errol. Chris, we're ready to welcome in our next presenter, who will be Matt Fifield, and he's joining us. We have Matt Fifield, who is the Executive Chairman for Cyprium Metals, joining us here today to walk us through his presentation. Welcome, Matt. Thanks for joining us. And I'm going to hand it over to you to take us through the opportunity that is Cyprium Metals.
Well, I'm Matt Fifield. I'm the Executive Chairman of Cyprium Metals. I'm also a significant shareholder. And let's dig in. So for many listening today, you will have heard of the Nifty mine and possibly of Cyprium Metals. It'd be almost impossible for you as an aspiring or actual copper investor not to have heard of Nifty. It is, after all, one of the most prolific past producers in the Australian copper market. It's also been going through a little bit of a midlife crisis as we change mining methods post the underground closure. So I stepped into the role of executive chair about a year ago. I come to this from a background of hands-on ownership and company founding and a private equity. This would be my 9th mine restart. And I've been involved in multiple public and private corporate turnarounds and restructurings. And we've been hard at work. If I could give you 3 things to think about today. 1, there is just unbelievable advantage around Nifty, okay, with the scale, the cost, and the timing to access this current market opportunity. 2, we have been really hard at work on a very back to basics plan. And executing on the ground, building fundamental value. And 3, the market hasn't caught up to what we're doing. So from my perspective, this represents one of the most compelling investment opportunities on the ASX and the most asymmetric risk reward for a rising copper price environment. Quick snapshot on Cyprium. So we trade on the ASX dominantly under the ticker CYM. We're about a $40 million market cap company. There's $80 million of debt that stems from the purchase of the Nifty asset and legacy operating costs and investments into the site. That gives us with cash on hand to run our business through to a production decision that gives us an enterprise value of about between $90 and $100 million. So we have one principal flagship asset, which is Nifty in the Patterson region of Western Australia. As I said, it's a past producer, and we'll get into that. Last year, we published a PFS. It has an after-tax NPV8 of $756 million. So that's roughly, 9-10 times our enterprise value and somewhere around 20 times our stock price value. And we'll get into that kind of gap and misperception here in a minute. We also have another asset that earlier this year, we published a maiden resource, the first resource on Maroochydore in 10 years, showing that it's about the same size as Nifty. It's strategically important, but we don't have time to talk about it today. Happy to take follow-up calls and questions around Maroochydore. So when you think about that kind of gap between where your net asset value is and sort of what's happening in the market and the market perception, you really have to understand what's happening with the asset and the story. So let's go a little bit through Nifty. First, the Nifty ore body it's massive and prolific. It's a single sheet of mineralized copper. It's sediment-hosted copper. There's 370 kilometers of drilling in it. And effectively, it was discovered because it was poking out of the ground. Now, the part that was poking out of the ground was oxidized and therefore suitable to be mined by open pit and turned into cathodes. So WMC discovered it, started up that shallow open pit mine, mined out the oxidized portion of it, and Straits Resources finished that off. And they produced just shy of 500 million pounds of cathode from 1993 until the SXEW shut down in 2009. Go down, the mineralization continued down dip, but at sort of the bottom, there's a very high grade area, 2.8 type % grades that led to the development of a deep underground mine. And so that underground mine was commissioned by Aditya Birla and later purchased by Metals X. And it ran successfully between, call it 2008 and 2018-19, producing again over about 1 billion pounds of copper, about 500,000 tons of copper and concentrate. And then what ended up happening at the end of life is the grades just kind of ran out. It was a lower copper price environment than today, but the grades ran out. Those high grade areas weren't there any longer. And so there was this period where the company was, the mine was searching for grade that it never found. So that left you with some legacy assets that we'll touch on. And then last year we published in that PFS a reserve that basically indicates that there's another 750,000 tons of copper left at Nifty, which means that we're about halfway through its life. So what's left? What's left here? Honestly, what's left here kind of, it's just a surfeit of asset and opportunity, but there are 3 things that you should focus on. First, from the SXEW, from that shallow open pit, there's about 91,000 tons of copper left in the heaps stacked above ground, right? This is easily accessible. It's sitting on heap leach pads. And we know this from metallurgical accounting, that there's an awful lot of copper left over, and it's sitting next to an SXEW plant. 2, there's 83 million tons of 0.9% copper sitting in that sheet of mineralization that goes down dip to the old underground. And that's sitting next to a concentrator they used to produce it. And then 3, through continued investment over time, this site has been maintained as an active mine site. So all the approvals are there. Some of them need to be updated, but that time gap that you see between maybe someday we'll bring this mine online and the potential to do that here at Nifty with all of this brownfield infrastructure is far, far less. So these 3 principal assets that are helping drive our business plan. And effectively, we've been executing a really simple business plan. There's not a lot of complexity. There's not a lot of new information that you need to find out or something that needs to go right. What you actually need to do is master the information that is there and make sure that it's solid. So in 2024, what you saw at Nifty is we produced, an MRE, and we spent a lot of time thinking about interaction of those surface accessible reserves with the old underground. We produced a concept study that gave us a kind of a framing scale. How big should this mine be? What size mining equipment should we use? We upgraded the geotech and then produced a PFS that again gave a concept of this is where we're going. We did the first heap leach mineral resource estimate in 10 years actually studying all the data and putting it together and saying, how would you approach this? And then incorporated that into our PFS. We onboarded a marketing partner in Glencore. We onboarded a execution partner in McMahon. And now we're in that phase where, with all of this planning kind of built up, we're working with McMahon as our execution partner to wrap our hands around what those early stage studies were and what does it take to actually execute on the ground. That's very important, by the way, in these brownfield assets. You need to actually think about what is actually on the ground, and then how do you move forward. It's different than many greenfield projects where you get to design from a clean sheet of paper. You actually have to consider the as-built environment. So what we're doing right now, we're going through this work with McMahon, and you'll see pretty quick fashion. You'll get an update on the cathode plan. I'll talk a little bit about that in a second. We're going to finalize their BFS scope for the open pit and then go execute that BFS. McMahon is supporting us on that. We're going to be updating our existing permits to reflect what our plans are, and we're going to be putting together construction financing and looking at JV sell downs to help fund our way into production. So busy year last year and a busy year ahead, but it's a relatively simple plan and we're executing it well. Talking about executing it well, I told you a little bit about my background. We also have Louis Chait helping us on the commercial side. Louis is the former CFO of Glencore Copper, 10 years there. Everything from cost cutting to mine financing to offtake strategy, operations in between. We have Colin Mackey, who's had multiple surface mine GM roles, worked in procurement, worked in more strategic roles as well. And he's very on the ground operational leadership. And then we've upgraded the board with practitioners and like Scott Perry, who brings a lot of executive power into the boardroom from his roles at Centerra. And then Ross Bapu, who's seen every way you can finance a mine imaginable. So really happy with the team, but then also our team is growing through partnership. And as I mentioned earlier, Glencore and McMahon, we consider to be a core part of our execution team. So the last thing that I wanted to talk to you about is, why is this asymmetric? So, okay, so you have all these assets sitting around, and it's not that, this is not a complicated plan. It's actually about measure twice, cut once. Well, we're doing this at a time where copper prices are surging. So our PFS data is sitting at a $4.25 a pound copper price and a 0.71 FX. And we were thinking about this, saying, what's the impact of bringing this small, fast cash flow, relatively low complexity project online? And when we ran the numbers, so if you look today, COMEX futures are 510, as high as 525 in out years. FX is sort of flat at 63 cents. What the world is telling us is that our $30 million CapEx, $45 million project basically is rapidly paid back. And suddenly we have access to cash flows in this environment that help us service our balance sheet and get us meaningfully down the road in terms of cash production. So we're extremely interested in this starter project. It has a similar impact in the end for our longer dated project. These are just revenue figures here, but the ultimate size of Nifty is about 36 to 40,000 tons a year. And if you look, this is, hundreds of millions of dollars in revenue at margin. And with the brownfield effort, it's actually an upfront CapEx spend that gives you access to this 20-year kind of cash flow stream and reserve tail. And that ultimately is strategic. So some of the mismatch here is how we're valued today. People have been concerned about Nifty as a failed underground mine. Right? You actually just need to recognize that it's halfway through its life, and a change in mining method that takes advantage of all of that brownfield infrastructure is going to create another 20 years of life. And we've got a competent team executing it. And ultimately, when you look around at where the comps are, try to figure out how to put some basis around this, you'll see that there is very few strategic quality mines in Australia left that people can access. So that concludes my remarks right now. I don't know, Chris, if you have anything that you wanted to add on, but I'll stop sharing and take a couple questions.
Great. Thanks very much, Matt. And what I'd like to say as well, for anyone that thinks, smaller cap mining management teams aren't keeping very busy, just go and have a look at the diversity of the announcements that Cyprium's been putting out. They're obviously moving this project forward, but they've also been selling non-core assets. There was a Maroochydore resource update, doing that deal with McMahon. So I think, you guys have done a great job to get to the position where you are now. So well done on all of that.
Thanks.
One of the things I'd like to touch on, I think you talk about that cathode project. I think it's, we're hopefully looking at that coming into production in the not too distant future. The PFS talked about I think around 4,000 or 5,000 tons for 4 years. Do you see sort of potential upside to that through that resource base that you talked to there? Like what could we be thinking in terms of potential mine life or scale around that cathode project?
Sure. So we're not plant limited. So the plant itself had a peak production of 25,000 tons. What we're actually looking at is what's a reasonable and cautious set of recovery around the way that we're planning on accessing the copper in the heaps. So our PFS, just to correct you, is sort of 6,000 tons. We think you might be able to push it higher, but and there's probably a little bit of swing around that, but let's call it 6,000 tons. And the AISC around that is $2.20 a pound. So when you're looking at the kind of, it's almost 50-60% margin business to get that up. The PFS shows basically a JORC reserve of 10 million tons at 0.41% copper. And that's basically because the drill holes in the stockpiles only went a certain distance. They didn't go down to the bottom of the stockpile because you wouldn't want to penetrate the liner. So prudence meant that in order to get samples, you couldn't sample the whole measure of what's there. What we do have is the benefit of the metallurgical accounting records from 20 years of production history that let us know exactly what was stacked there and what was recovered. And I think that there's every reason to believe that there's a long tail of additional resource that would come into play. Internally, it feels like that 4 years, can easily become 7.
Yeah, great, good stuff. Another one, perhaps I think there might be. You touched a bit on the history with the asset there. I think you guys, since you've been involved, you've done a great job kind of transitioning the company, sort of refresh the balance sheet, new team, really worked on those studies and things. So, when you contrast what you've done, perhaps to the sort of prior work that had been done, how do you see sort of the differences there in terms of what you've delivered versus the previous?
Sure. Okay. I think I understand the question. I mean, look, we actually have the luxury of being a low market cap company, right? So that allows us to really focus and look at what do we need to do to be successful, not what do we need to do to meet some expectation that validates our market cap. And so as a result, that's allowed us to go back and develop. It was a bruised company, so you need to develop a kind of a crawl, walk, run mentality. So when you look at the heap leaches, that's a very low complexity project. There's no mining. But rather than adding capital and walking past all the advantages of a brownfield mine, we just looked at what's our lowest capital, lowest complexity plan. And that's really different to what had been presented earlier, which is what's our highest recovery, biggest bang. We want to have a big project that's going to validate a big market cap. We just want to be successful, right? We want to produce cash. We want to stop asking shareholders for money. We want to be able to sit there in a land where we're covering our bases, and then that sets us up to execute super hard on the open pit. So the strategy for us is actually, our strategic objectives are different, and that's reflective in how we're approaching it. The second thing is because of the turbulence going from an underground mine to whatever it's going to be next, we really feel a pressure to get things right. And so we want to, not perfect, but right. So there's been this huge emphasis on looking at the root data. And this is just a gift that keeps on giving. I mean, The resource at Maroochydore cost us nothing. That's drilling that had already been done. We just reanalyzed it and looked at the sulfide zone that nobody ever looked at. And it's this huge, it's a huge resource. And it was, free for shareholders, which is fantastic. And that's important because, from the other thing that we didn't talk about is we're all in. I mean, I'm a cash investor. The board just put up $3 million in the latest raise. There's just tremendous alignment around creating shareholder value. So this, again, that mispricing in the market is we're leaning in and wanting to own more and more of this because we feel the strength of our execution plans and the mismatching opportunity.
Thanks very much, Matt. Back to you, I think, Pete.
Thanks, Chris, and thank you, Matt, for that presentation. I think the magic word there, I think, for viewers and your shareholders is alignment, and you've demonstrated that with the board's commitment with their own hard-earned money. That's great, and obviously the theme here we're seeing come through is smaller and nimble and smaller market cap companies taking advantage of these brownfield assets that larger companies have walked away from. So congratulations, and thank you for your presentation today.
Thanks, Peter, and reach out with any questions. Thanks for the time and attention.
Thank you. All right, 2 from 2 so far, Chris. I'm pretty happy with the standard and the quality we're getting here today, and I'm sure all our audience will be too. And moving straight into the next one will be just as rewarding. We have the CEO and Managing Director of Hillgrove Resources, Mr. Bob Fulker, who'll be talking to us about Kanmantoo and his overseeing of the ramp-up of that project, Hillgrove. I think he's ready to come in right now. Over to you, Bob.
No problem. Thank you, everyone, for taking the time to listen today on dial-in. There's 4 other presenters that they've been very interesting. I'm very keen to continue to listen to the remainder of the presenters as well. Just on to Hillgrove specifically. I do believe that we represent a great opportunity for people in the industry that are looking for a pure Australian copper play. And we are a copper producer. We're entering the free cash flow period, and we've got some additional new news that we've been announcing in the last week about growth and how we're going to take the company. So we'll just progress very, very quickly forward. Hillgrove and Kanmantoo is located in South Australia. It's located in the Adelaide Hills, and it's a tier 1 location. So just onto Hillgrove. We are situated in Adelaide Hills. We do operate the Kanmantoo operation. I believe it's a strong operation. It's situated in a tier 1 location just outside of Adelaide. We do have a local workforce. We're producing copper. We have an installed capacity of 3.6 million tonnes, and we have a relatively young underground workforce. We've only been mining underground for about 20 months, but the processing plant has got a consistent knowledge for the last 15 years. So therefore, the processing plant brings a lot of experience and knowledge of the mineralogy that we're actually processing. From an operational perspective, Kanmantoo is well supplied from the supply lines. We've got established water, power, consumables coming across. We're only 3 kilometres off the main highway between Adelaide and Melbourne. So all those sort of things are very well supplied and supported. Mining is a very simple top-down method. We're using uphole retreat stoping, minimum ground support, and we're only backfilling to reduce our operating costs and reduce our hauling costs. We don't need to actually backfill or fill the voids from a geotechnical perspective. And as I said earlier, the mineralogy is well understood with 15 years of metallurgical experience. We updated our resource last October, and this was the first time in a couple of years. We now have a robust copper resource of around 19.3 million tonnes at 0.77% copper with gold and silver credits. We also announced last year a maiden ore reserve of 2.8 million tonnes at 0.91% copper and 0.15 grams per tonne of gold. The grade uplift from the resource to reserve is pretty standard at Kanmantoo, and we do expect that this will continue. During 2024, we also generated $21 million of operating cash flow, which was back-end weighted due to us commencing commercial production in July of last year. In January this year, we delivered our initial underground guidance for 2025, 14,000 tonnes of copper production at an all-in cost of $3.40 to $3.90 per pound. At current spot prices of nearly $4.50 US per pound, we do expect strong free cash flow generation from this operation this year. For us to truly be considered a true copper stock, I do think we need to deliver on our promises. And in 2025, we've got a cost reduction and a cost guidance, and we are expecting to deliver. In the last 12 months, we have improved all of our operating metrics. We've actually increased our development meters. We've got consistency of tonnes. We're improving the grade and getting consistency of grade, and the operating plant is delivering recoveries which are very sound. So the mine has reached previously targeted 1.4 million rate with days and sometimes weeks of significantly higher instantaneous rates. So we've actually had 1 to 2 weeks of 1.6 to 1.7 million tonnes going through the plant. We can't sustain that at this point in time. So we've got to that 1.4, and now's the time to continue to grow. We are consistently producing at the bottom or above the bottom of our production guidance, and we need to demonstrate a reduction of our costs in the next year. When we do all that, we will be considered as a producing copper mine that is really cash generating and producing cash in the bank every month. So I think that's what our need and aim needs to be. Moving on to the future, what we need to do is deliver what we've said. We need to deliver for the future. There are really a few reasons why we need to keep a watch out for us. Why people need to keep a watch out for us. We are delivering on what we've actually said. We're achieving our guidance, and there's still more improvements to come. So we've still got more planned improvements. We have just raised 13 million with approximately another 3 million from the SPP to come. This is actually to enable us to grow the mine and to grow from that 1.4 to the 1.7 to 1.8 million tonnes. This is about accelerating our Nugent development and opening up more areas in Nugent. This will allow Nugent to have 6 sublevels within 6 months available for operation, and it'll actually open up the underground with 2 accesses. So it opens up the Nugent decline, completing the loop of the decline, which will improve our efficiencies. It also opens up further diamond drill platforms for resource definition and drilling. This resource definition and extensional drilling comes in the form of around 60,000 metres of drilling that will be done this calendar year, which will be incorporated in our mineral resource and ore reserve, which we plan to release in the December quarter 2025. So the last one was last December 2024. We are planning to get a cadence of release of the updated mineral resource and ore reserve every 12 months in that last quarter of the calendar year. All this is from a company which is delivering strong cash flows and an enterprise value of around about $71 million. What I think this means is that next year our cash flows will improve again from our 21 million this year. With all these holes that are going into the ground below known resources and into the known resources, I do expect that our mineral resource and ore reserve will increase next year, even taking into consideration depletion. And I do expect that we'll continue to see that uplift in grade that we see when we go from a low-level resource to a high-level reserve. Nugent will start producing in the first half of 2026 at its design rate to give us a 1.7 to 1.8 million tonne total operating tonnes for the entire mine. So with all that, we will then come out at the end or beginning of 2026 with our new guidance for 26, and it will include the increased tonnages, it will include the increased resource reserve, it will include the potential 15 to 20% cost reduction due to the increased tonnes. And we'll bring all that out at the end of this year, beginning of next year, and I'm talking calendar years now. I'll just move on very briefly to, and this has all been announced previously, but the growth opportunity here is at below our known resources. It's a long strike of our current known resources beneath pit mined tonnes. So everything here is known about. We actually are drilling, and these holes that you can see on the screen here are the drill holes for the extension of the Kavanagh and the Nugent ore bodies. The green and the blue, the red, the green and the blue are the mineral resource definitions. So you can see we're aiming for below the current resource. And this is 20,000 of the 60,000 metres of drilling. The 40,000 will be going into the green and the blue zones to increase the confidence and to bring them into reserve next year. So we are expecting to bring a lot of this into reserve as well as we go forward. We're enabled to do this because of the successful capital raise we've just completed. We're enabled to do this because we're opening up Nugent and enabling us better access for drill platforms, and we're enabling the increased tonnages because of the diverse geographic range that we're going to get when we open Nugent up. We'll have Spitfire, we'll have Kavanagh, and we'll have Nugent as 3 distinct operating areas. So therefore, we can continue the cycle and improve our effectiveness and efficiency of the mining operation. So once we actually get Nugent in place, which is within 6 months, then we'll start to produce from Nugent. Production from Nugent will start the back end of this calendar year, but we won't increase the tonnages until the first half of 2026. And with that increase in tonnages, we are expecting to see a unit cost reduction of around about 15 to 20%. So that 25% increase in tonnages does allow a 15 to 20% reduction in costs. It will also give us the additional resource or sources, as I mentioned earlier, therefore giving us geological optionality across our lease. So all this together is a great opportunity from my perspective to actually grow Kanmantoo and to grow the stability of the operation to deliver for Hillgrove and for Hillgrove shareholders. So you can see here the drill holes that we announced just a little while ago. As soon as we get more drill holes, we'll actually keep bringing them out, because this area up here is a stellar area. I mean, we're getting hits of 16, 18 metres at 3 and 5% copper. That's well above what our current ore resource and reserve is. And I think that this is actually where we can start looking for the future. The brown colour is as built, the blue is design. This is the work that we will be doing with the acceleration of Nugent. And as you can see, the area that I've highlighted here is actually not in our mine plan. And obviously, when we get to this level, we'll be driving straight out here to start opening up this part of the ore body. Just in conclusion, 2024 was about delivering what we said last year. It was about concentrating on improving our operation. It was concentrating on our operating metrics and reducing our costs from the first half to the second half. We delivered that. The second part of last year was to actually get a maiden mineral resource and ore reserve out. We did that in the second half of the year. So in the December quarter, we released our maiden underground ore reserve, and we increased our mineral resource to 19.3 million tonnes. And we significantly improved the resource life of the operation. I think, Chris, I'm going to use you here for a minute. I think Chris has got 5.5 years in his model or something like that, similar. I think that's a lot better than if you use just our reserve as a life. But I do think you're still being conservative, okay? I think that there's a lot of upside here. And I think that as we improve and drill, we'll be able to demonstrate to the market the true upside of Kanmantoo. Because that is really what excited me about the opportunity at Hillgrove. When I was looking in from the outside, what I saw was a geological upside and continuity that went to depth. I saw long strike extensions, I saw down dip extensions, and I saw every drill hole was confirming what the geologists saw. So that was what I actually saw, and that's what got me excited. Because without good geology, it's very hard to do anything else. 2025 is really, or was going to be a year of focusing on delivering our budget and delivering our guidance. That was the actual focus we had. We are planning to release another resource and reserve end of the year. So we can put that one in as a promise. We will deliver that. But an opportunity arose very recently about how we could accelerate Nugent and therefore accelerate and bring cash flows forward from future years. We saw an opportunity to actually increase the development in Nugent and open the whole area up as well as de-risking the operation. So opening up Nugent actually gives a better cash flow, better ore flow, increases our tonnes, but it actually de-risks the operation from a delivery perspective as well. 2025, we are set up for delivery of a mine that will deliver 25% more ore in 2026. It will deliver a mine that is capable of reducing our costs again from where we have been in first half of 24 to the second half of 24, and I'll be able to deliver the future. The real issue here is what next? So we ask ourselves all the time, how do we add shareholder value? How do we add shareholder value going forward? It really is how do we use the enormous mineral endowment that Kanmantoo has to add value to Kanmantoo and to Hillgrove? How can we utilise the 3.6 million tonne processing plant? How can we bring that into the thinking and our expansion and growth? And how do we employ the capital or the cash that we're going to be creating this year and next year? and how do we actually give that to the shareholders in true value through sound capital management. So with all that, I'm pretty excited about what Satcam into. I'm pretty excited about what Hillgrove can do. We need to deliver. I think we will get re-rated. I think we'll get re-seen from the market when we start to deliver, when they see what we can actually do, and we get month in, month out, quarter in, quarter out, and in the future, year in, year out, a delivery of our promises. And with that, Chris, I'll hand it back to yourself or Peter for questions.
Thanks very much, Bob. Good to get the update. It's clearly sounds like it's going pretty well on site. It looks like a range of records getting delivered operationally in sort of January, and then mostly beating them again in February. So that's looks like it's shaping up well, and then nice to get the kind of the growth story there with Nugent coming through now as well. It's looking like it's shaping up really well. So congratulations.
Thanks, Chris.
Now, yeah, with you've obviously got Nugent in the pipeline now. I think that's going to get a good uplift in production. See the costs coming down. As you mentioned, you've still got plenty of capacity in the plant to work with. So, are there other similar opportunities that you think we'll start seeing coming into the pipeline? Are they sort of production growth opportunities, or are they more likely to be life extensions? Some of these other targets you're talking about. How are they shaping up? Thanks.
Great question, Chris. Number one, 1.8 million tonne underground mine is not a small underground mine. And we're striving to get there. We're really going to be there in 2 years of development. So I think that's a pretty awesome delivery from the underground perspective. Saying that, we do have a 3.6 million tonne plant that we can use. The options are along strike. If you've seen the exploration update we put out just a couple of weeks ago, there's a lot of exploration along strike beneath known resources, or beneath known mineralisations, which we will be drilling in the coming years. This year is really about extension of the current and the known resources at Nugent, at Kavanagh, at Emily Star, and at Spitfire, Critchley, and there's one other which I can't remember what the name is. We've got about 10 of these things across the lease. So it's really about how do we actually concentrate on those ones first, and then see how we can actually stabilise a 1.8 operation. And then every one of those opportunities gives us another opportunity to start another decline or another production phase to do rinse and repeat. So in the short term, it really is about extending that life of mine to give a resource, which is, I'd love a 10-year resource, okay? I'd love a 3 to 5 year reserve. That's what the challenge of the geologist has been said. Give me those ones this year, and then we start to look at externally along that strike to actually increase our production.
Plenty to look at. It's exciting. Perhaps quickly on the balance sheet, just post the cap raise, obviously that's looking in pretty strong shape. There was the unused sort of working cap facility there. I think you've mentioned in the recent quarterlies looking at potentially sort of replacing that or refinancing that. Now you've got the reserve in place and a bigger resource established. Are you looking for sort of more vanilla bank facility? Are the banks talking to you about potential working cap facility just to sort of further bolster that liquidity position you've got now?
The simple answer, that's yes and yes. The longer answer is so that facility falls away end of next month, so back end of April. And we've been working for the last 2 to 3 months on replacing that. Obviously, the balance sheet, the liquidity, all those sort of things helps the future of that. We do have 4 or 5 parties that we're actively talking to at the moment in conversations. Are we 99% there? No, I reckon we're about 75 to 80% there. With the last little bit to go, we do expect to have that sorted in the next sort of 1 to 2 months.
Great. Thanks for that update. It's all shaping up really well. And I can hand it back to Pete, I think, for our next speaker. Thanks, Bob.
Thanks, Chris. And thank you, Bob. I took some notes there as well, but 3 words I wrote down were that you were showing excitement, conviction, and certainly vision too. So pretty good messages there to get across to shareholders and investors. So thanks for that. All right, we are moving along, and these stories are fantastic. I'm really enjoying listening to these, and the next one will be another terrific update. We've seen this project around for quite some time progressing. The Kamagtai project in Mongolia, with the Executive Chairman, Mr. Colin Moorhead, to talk us about what Xanadu is doing over here in Mongolia. Welcome, Colin. Thanks for joining us, and we'll hand it over to you to take it away.
Thanks very much, Peter, and thanks to MST for hosting and for everyone's attention today. Appreciate it. Xanadu is an exploration company focused exclusively on looking for elephants in elephant country, and we're entirely in Mongolia at this stage. Few disclaimers there. Please read them at your leisure. So, why do we like Mongolia? Well, it is elephant country. It's undoubtedly one of the few places left on the planet where you can whack rocks that haven't really been whacked before. And the last systematic exploration that happened in Mongolia was during the Soviet era, and there are some large systems there. Obviously, it's the home to the fourth largest copper mine in the world in Oyu Tolgoi, one of the largest coal mines around Tavan Tolgoi, and of course recently approved Orana uranium mine up in the north, which will be the sixth largest uranium mine in the world. So it's a great spot. It's also a place that's where you are able to discover and develop mines, good strong mining culture, great infrastructure. Half my life's been looking for infrastructure in the mountains of Papua New Guinea, so this is actually a pleasure to be from an infrastructure point of view. And of course, we're right on the doorstep of China, which is the biggest market for copper in the world. We have three main projects: the Hamagtai project, the K is silent in sort of Russian sort of languages, so Hamagtai project, which is our most advanced big porphyry copper project I'll speak about. Red Mountain is a similar sort of setting in the South Gobi. More a North Parkes, Lake Cow type setting than a Hamagtai setting, which is more Acadia style bulk tonnage system. And a new project we've got into, Sant Tolgoi, up in the northwest, which is a magmatic nickel copper system. As I said, Hamagtai is a large porphyry system. It's located in the South Gobi. Tavan Tolgoi, there is a major coal, a series of major coal mines there, similar size to the Bowen Basin. The blue line across there is a railway line which connects Tavan Tolgoi across to Sian Shan, and you can see those three main rail routes to the border with China, and the Mongolians and Chinese have done a lot on fixing up those border connections over recent years. We're located just to the north of that railway line. We put in a connection, grid power to us the other day or last year, and it cost less than $400,000 US to get it up 7 kilometres from the power from the railway line. Granted mining lease 30 years, 40 years to extend, so similar terms to Oyu Tolgoi. Huge resource, and we've just completed a pre-feasibility study. Here's a long section showing you the system. That's about 7 k's across, similar size if you looked at Oyu Tolgoi or Cadia in the same view. It does have some structure to it, some high grade components. There's over 100 million tonnes of greater than 0.8% copper in those purple blobs, and it's open at depth. There is real potential here for a future underground. The Zara deposit there in the middle doesn't make it into any of our open pits at this point in time, but it's a significant resource in its own right. The resource reserve numbers are on the right there. The pre-feasibility study that we've done is purely an open pit study that looks at a 30-year open pit mine life. So this is a mine that the PFS describes will do 75,000 tonnes of copper and 165,000 ounces of gold for the best part of 30 years. I'm not allowed to use equivalent terms, but that's about a 500,000 ounce per annum gold mine. So it's a copper mine with a very low all-in sustaining cost of copper production after gold byproduct credits, and it works on scale and efficiencies of a large mine. Strong economics there, pre-production capex of about 890. Our partner Zijin built the Geelong mine for about the same amount of money at 5,000 metres in Tibet. So I suspect that if Zijin are in the position to build this mine, they'll do better than that. Based on our modelling, a quick payback, a high IRR. and an NPV of 930 million at 2100 gold, 14 copper, and an 8% discount rate. We do have a big brother. Our strategy was to get a resource out, a good scoping study or PEA, and use that to attract a funding partner. So Jin came in. I've got a slide on that, but they became our 50-50 partner at the asset level and our largest shareholder. And together we share 76.5% of the project. We are at the point where we, upon delivering the pre-feasibility study, operatorship transition to Zijin, so they've had that for 6 months now, and it did kick off a 6-month option period where we have, at our sole discretion, the ability to put either all of our share of the project to them for $50 million US, or half of our share to them for $25 million US, and then be loan carried through to production, sort of Gold Road style. So it's technically a big, simple open pit with a conventional sulfide flotation, producing a beautiful copper con with very strong credits and not much nasties in it. So and it's 100 km from the Chinese border. The next steps to get it to FID, you need to complete a Mongolian feasibility study. It's a very sort of Russian prescriptive process. You need to complete a Western style environmental impact statement, and importantly, a bankable feasibility study. And once submitted to the government, the key issue is to negotiate an investment agreement with the government, which will settle the fiscal settings, royalties, taxes, and what have you. So we've been on the classic journey of a company that found something, went up, and then the studies began, and it sent us down here into what my CFO calls the Valley of Jeff. I joined in 2019, and we've been executing a strategy to get us back up to a point where this mine can be built and value can be realised for our shareholders. In terms of the structure, there it is. Xanadu as a Zijin share of 50-50 JV on Orion Minerals, which is a Singaporean holding company. There is a tax treaty between Singapore and Mongolia. The holding companies, we have 85% of Mongol Metals and 90% of OU land, so 85% of 90% is 76.5%. The Zijin came in with a series of placements which were subject to Foreign Investment Review Board approval. They sit just below 19% now on our register as our largest shareholder, and have 50% of the project. And as I said, this is one of I suppose what sets Kharmagtai apart is it's a copper mine that will get built, and it will get built this decade, and can be in production as early as 27, 28. So I think that's one of the few mines around the world of this type that can get built that quickly from this point onwards. We have called an extraordinary general meeting. Our put option period expires on April 14th. Due to the requirement for notice and what have you by the ASX, we needed to put the notice of meeting out last week. And on current, based on an independent experts report, we are currently recommending, should we get to that decision, that the shareholders accept the 25% put. That's been valued in that document as our, effectively, excuse me, our least worst. Sorry, I'm at my parents' place. It's our least worst option. And our current approach is to aggressively pursue a deal before that date, and in which case, if that deal is seen to be superior to exercising the option, we'll pull that resolution from the EGM and recommend the deal. So we're actively pursuing that now. Obviously, we've got Zijin as our partners, and they're the obvious people to do a deal with. There are third parties that are interested in this project. In fact, the whole copper world is aware of it and looking at it. It is recognised as probably one of the pre-development projects that will get built in the short term. We have Jefferies helping us on the defence side. We have Bacchus Capital also working with us on an option to fund our half should we need to do it and stay in there at 50% for the next phase. And that's where we are today. So with that, I should also say that we've got 2 other projects. They are strong. I mean, if Red Mount was sitting in the Lachlan Fold Belt, probably have a company on it. We are actively looking for a JV partner to help us pursue that. And we're in the early stages of Sant Tolgoi, where last summer we identified some cracking walk-up drill targets, and we'll be drilling them in the summer. So with that, I'll pause and accept any questions.
Thank you very much, Cole. Michael Bentley here. How are you going today?
Good, Michael. You're familiar with the project?
I am. I've done a little bit of work on it in my time. Interesting time for the company now with looking at the sort of strategic options you have, and given that you need to get that put option approved by the shareholders if need be. Is it basically sort of 4 options you're looking at? That'd be a corporate a deal at the corporate level, a takeover type situation. You can also look at your current situation where you just work out a way to fund your 50%. I think you can also, you're looking at a potential strategic investor in the project as well, and then of course the option that you have, the 25% put option. Have we sort of covered the areas you're looking at there, or is there some other things you can look at as well?
Yeah, they're the basic choices. We also have a $50 million put option, which would sell all of our interest to Zijin for $50 million US. That's kind of the nuclear option if Trump does something weird or China invades Taiwan or whatever. Now, clearly, our independent expert values the project higher than that, values the 25% put higher than that. And it's not a terrible outcome. We get 25 million up front, which we could either give back to the shareholders in one way, shape, or form, or use it to advance our exploration and portfolio yet to sort of really land on that position. It is a real option. We feel it's important to be able to be in a position to have term sheets to fund our way forward at 50%, should that be what we decide to do. That is a function of the term sheets and how competitive they are, and of course, being a pre-production company, it's a pretty tough world out there. But we certainly have Bacchus working on options there, and there are some real options we will have in place before that deadline. Certainly, as I said, there's the whole copper industry is aware of this and aware of what it is and what it isn't. Mongolia is not for everyone, and probably say that the interest from Eastern companies is stronger than interest from Western companies. But yeah, you're right. There's plenty of options available to us. Everybody's getting a little bit nervous about the timeline, but it was always going to go down to this period, and I'm reasonably comfortable we'll get an outcome one way or the other over the next few weeks.
Yeah, I think you're going to be pretty busy by the sound of things with all the balls in the air. Look, just another question. I know everybody always, when looking at Xanadu, always wants to know, where's the government of Mongolia at, and what's their attitude, and how how things may have changed. And I know you've said that they've sort of looking more positive. They're very keen on the mining sector. Can you just give us a bit of a rundown on that?
Yeah, I can. I was just over at PDAC, and the Mongolian delegation was there. Was able to spend a fair bit of time with the minister, and they're in my view, one of the few jurisdictions is actually heading in the right direction in terms of improving as a foreign direct investment. They manage their ESG issues quite well. their standards are quite high, but the complexity of this project's quite low, so I don't see any issues there. They recently did an investment agreement with French uranium company Orano. That was a strategic project, so the company was coming from a weaker bargaining position than we'll be coming from. And they were able to negotiate a package of equity, royalty, tax, etc., that was acceptable in terms of overall economic benefit to Mongolia and to Orano, the developer. We're going to have to go through a similar process. We are not a strategic project, so there's no automatic right for them to take equity in the project. But, you know, in the end, you might give it to them, as part of a mix of benefits that achieves a fair outcome for everyone. And we've seen what happens when you have a deal that's not a fair outcome for Mongolia. It doesn't work. So, you know, the government is acutely aware of the importance of mining to Mongolia. They've just been elected. They formed a multi-party cabinet to get effectively, you know, tripartisan support for any law changes required and any project approvals. And in the French case, they did actually remove the requirement for the government to take up to 34% of a strategic project, as long as the overall economic benefit was at their target. So they changed the law to get that project approved and then approve the project. So I think that shows real intent. And the country is really keen to improve its foreign direct investment credentials, particularly with mining.
I think it's very interesting your comment made that they're actually moving in the right direction. I think, you know, implying that other jurisdictions are getting harder rather than easier. It's a very interesting comment. One of the presenters earlier talked about, and we go back to sort of funding options here in case, you know, where you're looking in the potentially where you might have to create some, get some funding, is that royalty and offtake funding is becoming a lot more, you know, common ground in these sort of projects. Is that the sort of trend you're seeing as well as you look at different funding options?
Oh yeah, absolutely. Yeah. But I suppose, you know, what I need to make clear is that would have to happen at the Wheaton level, which means I need Wheaton to agree to it. And, you know, and listen, they're a good JV partner. They know that there's a funding issue and we need to keep the project moving. We don't want to lose the summer. You know, it's just warming up now. I think the top was -5 yesterday, which is positively balmy for UB. So we're about to hit the field season. We don't want to delay the project, and you know, Zijin are keen to resolve this one way or the other. And you know, if they're not ready to do a deal, well, maybe they'll be happy to help us with the funding side of things, either by allowing us offtake or vice versa. You know, we also have the ability at 50-50 to approve their offtake. So you know, it's not a totally weak position to negotiate from.
Thank you, Cole. I was just waving my hands wildly there just to get some background noise out of the way. Sorry about that. Look, we've come pretty well to our time allocated. Thanks very much, Cole. I appreciate your time today, and we look forward to over the next couple of weeks seeing where you progress and how you progress. And good luck with all those negotiations. And I hope it goes well for you. And I'll hand it back to Pete. Thanks again, Cole.
Thanks, Michael. Stay tuned.
Thanks, Michael. Thanks, Michael. And thanks, Colin. Just looking at your background, it looks like a perfect place to have a copper project. And even though it is cold, it's an ideal location.
Well, absolutely. It's, you know, as I said, having spent most of my career in New Guinea and Indonesia and places like that, trying to hang tailings dams off the sides of mountains and whatever. This is pretty simple technically. The complexity is in the jurisdiction and in the commercial JV, etc. But we'll sort all that out, and this will.
Colin's just left us there, but pretty good insight as to what's going on at Xanadu and the Karmagtai project. All right, we're rolling along to our last speaker here, and we have representing Southern Hemisphere, the chairman, Mr. Mark Stowell, who's going to walk us through his copper gold project, which is in a great location for copper gold project, where all the I guess it's elephant country over there. I'm going to let you take us through the story, Mark, and over to you.
Thanks very much. Yeah, look, really interesting, and thanks NST and MST for putting this on, and some really interesting stories have come through before us. So, look, we're in the land of the giants, similar to the Xanadu story, but we're in Chile, beautiful part of South America. You can see a nice picture of the recent drilling there. We're in copper porphyry, similar sort of geology, and all of the majors operate in Chile for very good reason, and that's why we're there. We're well on the way to something quite substantial here. So moving through that one, so just a bit of location, picture of South America there, satellite view. Yarwun's our main project in central Chile, about 4 hours from Santiago. We also own a manganese project in the north, which is at a PFS stage, waiting for an offtake agreement on that one. Chile's international credit rating of A. Australia's AAA, Argentina CCC, for some context on that. Also, Chile is geology A. 6 or 7 of the biggest copper mines in the world are located in Chile. And there's good reason for that. Obviously, the geology and the politics. Most of the majors are operating there. Our project, we own 100% of it. And yeah, we've been getting some spectacular results recently, like 100 meters from surface, 0.6 copper equivalent, including a nice chunk at 0.9%. And that was to end of hole, so a good candidate for deeper drilling. Sorry, we'll go back to that one. Okay, so capital structure, fairly straightforward, dominated with large private investors, very tightly held, and capped at about 20 million. So we've done a lot of work in the last year, really pulling this story together, doing a lot of technical work on ground and some geophysics work. And I'll tell you a little bit more about that as we go through. In terms of team, we've done our apprenticeships in copper. We've built mines across the team in Africa, in DRC, operated them. So we have a pretty good handle on what's needed and how to take these things forward. And some good financial experience as well. As I mentioned earlier, we're in the land of the giants here. So Yarwun, you can see on the left in the goldy colour, 60 k's away is the Las Palumbres copper mine, one of the biggest in the world. It's 4.9 billion tonnes of ore at 0.6-ish. And then you've got some of the projects in Argentina, El Pachón and Aldebaran further north. We're in a really good location, low altitude, 5 k's to grid power, 200 k's to the port, a town 20 k's away. Santiago's 4 hours away. So, yeah, low population area and very accessible compared to some of these projects high in the mountains. They're very expensive to operate in. And fortunately, we've got, geology A and in a good location. We've already got an existing resource base that we're kicking off with. We're already at around 680,000 tonnes of copper equivalent. Copper and gold dominate. There's a bit of moly credit in there as well, and running at normal porphyry grades around the 0.4%. So we're working on an upgrade to that resource for the second quarter. This thing's got some scale. Just a little bit of a context here. There's some top slide there, so we've gone a little bit skew with the PDF conversion, but we're about 4 kilometres strike on that thing. And if you look at Filo de Sol, which BHP and Lundin have just bought for in the $4 billion range, we're similar footprint size to that and way less drilling, obviously. So this is one of those projects that's going to grow in value as we drill deeper, and we're hitting some good grades from surface, and we'll be hitting more as we go deeper and start getting some really long intersections, as we've got before. This is looking south to north down the Yarwun Valley. The watershed's just at the bottom of the page there. So up at the top end, there's a central deposit that's drilled out. The Cerro-Ferro deposits look like they're joined up. The yellow circle there's a new area which we've just recently found with some surface work that's showing some copper ore outcropping just below surface. It's got a lot of colluvian cover from wash from down the hill. And then in the foreground is a curiosity target, which is an enormous deeper play. To give you an idea of some of the top drill results in the project, you got 34 meters at 1.5%, 440 meters at 0.75, including 106 at 1.69. And the ones in yellow are the ones of all our recent drilling. So, we're getting 105 at 0.64, 132 at 0.48, those sort of numbers, and 151 at 0.51% as well. So some really nice grades there. That rock on the right-hand side is chalcocite and chalcopyrite, so some really high-grade stuff coming in from some of the old underground adits. Recent drilling, this is a plan view. Just give you an idea of scale. That area in green there, or the drilling north to south, is 2.2 kilometres long. So that's the size of the super pit. And we've got a lot more drilling to do here over time to really outline the ultimate scale of this thing. We're extending it south and north with current drilling. As you can see, it goes beyond the resource sort of outlines in the grey dotted lines there, and more to follow. We've done a lot of geophysical work over the last year, which is throwing up some really sizable targets there. So the coloured outlines on this map are showing obviously the depth targets for the northern deposits, and then the Curiosity deposit in the south there is seriously big. It's 1 kilometre to 2 kilometres diameter, deep, and something that could really turn this into a major project in the copper space. Just going back to what we have, this is a schematic pit outline of the central deposit. This one's drilled out. It's around 108 million tonnes at 0.42, and basically ready for mining. And we're now adding to that to add to the endowment and get it to ideally in the 25-year mine life at around the 50,000 tonne a year of copper or greater equivalent in production. Interestingly, we're hitting a lot of water in drilling, and that's really unusual in Chile. Water is quite a scarce resource, and it looks like we may have enough to conduct operations, or certainly make a big dent in what's needed. Just some of the cross sections from the recent drilling. As you can see, they're mineralised entirely through the drilling there, and opportunity to extend diamond tails deeper, and we don't know where the bottom of this is, so we're starting to get a good understanding of it. There's another one through there, 130 metres at around 0.5%, and we don't know where the end of that is as well. So these were RC holes, and we finished up because there was too much water in the bottom of the hole. We were planning to get them down to about 200 metres, and obviously with the water ingress, we then lose quality of sample. Basically, like panning the gold is quite a lot of free gold, and that sort of washes out if you've got too much water. Another bunch of results, from last year as well. Good, decent 156 meters at 0.51, 136 at 0.48. So these are diamond tails from drilling. And then further south, we've discovered a whole new zone that extends, and once again, we're drilling holes that end in mineralisation, like hole 48 there. Hole 47 may not be at the end either, and these bottomed out because of water again. But good section, 50 metres at 0.5. So a really interesting growing deposit here. A bit more on the geophysics, which we've done. You can see the big sort of purple red patch in the north there. That's demonstrating that those 3 deposits in the north come from one rootstock, so they're from the same source. And the southern one is a separate one, which is the Curiosity target, which is a very large one, which also is coincident with the litho geochem modelling that we're doing. But it shows in the northern section that there's a deeper prize here, and obviously a big prize at the southern end. Just some of the outcrop showing a mineralized system. There's epithermal veins which sit above these porphyries, and we're seeing interesting grades of copper. Obviously, the old timers have dug adits and mined ore out of this thing in the epithermal, so it's a good vector that there's a really big deposit sitting under this at Curiosity. There's a cross section of the litho geochem modelling, and you can see the ferro-cero deposits outlined there, and we're hitting ore blocks with these. This technique is showing mineralization where we've actually drilled, and so it confirms that side of things. And then the Curiosity target, as you can see, it's a kilometre diameter at the top, and the big red section is about 2 k's diameter. There's a sort of closer section of Cerro-Ferro showing ore blocks where we've got geochem targets. A little bit of a case study here, just to put in context, which we got some from the Xanadu presentation, but this is in our neck of the woods. A company called ATEX Resources. The type of holes they're drilling, 2.2 kilometre holes, and hitting some spectacular results. Similar geophysics target to what we're seeing at Curiosity here, incidentally. They're hitting 900 metres at 0.75. Very high in the mountains, 4.5 k's above sea level, and drilling extremely deep holes. But they had Agnico Eagle put 40 million in for 13% at above market recently in October. So in summary, where are we going with this project and the company? We've got a clear direction forward. We're drilling for a major expansion, targeting a sort of 25-year open pit style mine, and then there's the deep underground value add on top of that as well. We're using all the most modern scientific techniques: magnetotelluric, drone magnetics, induced polarization, TerraSpec core logging. So a whole lot of other stuff. We use all of these vectors to determine where to put the best holes in. It's so big that the hard part is knowing where to start drilling, and once you've hit it, then obviously you can follow on. We run a very tight ship. That's our entire team there, barring our CFO in the photo there, at site. And then obviously we contract in drillers and geophysics experts and others. So a good group of guys on ground. We run a very tight ship and put everything into the ground. Just in context of the area we're in, there's a new mine being built 8 k's away. There's quite a lot of synergy with that. It's called El Espino. It's owned by Pucobre and RCF, the resource fund. Pucobre is the operator with 76%. RCF paid $90 million US for a 23% share of that, which got the development underway. And the photo on the right is the power lines and roads going down to the operation. So more to come out of that space. They should be in production in the next year or two. And then as I mentioned earlier, we've got a manganese project that's kind of a free kick. It's been drilled. It's got a PFS on it, albeit a bit dated. It outcrops at surface, so very easy mining proposition, and a nice asset if we can monetize that or bring in a joint venture partner who can deal with the offtake and buy it. So the investment proposition, this is a very rare opportunity that you see here with Southern Hemisphere. We're in an A-rated jurisdiction. We're using the latest science-based exploration. Substantial resources already drilled, well above our market cap in cost of drilling that. There's 65 kilometres of drilling, including half of that's in diamond. Huge growth upside, and as copper price increases and demand increases and supply obviously is tight, this asset will grow in value, as well as the work we're doing to add drilling on a careful basis. And then obviously, low overheads, and we're well funded. So very few of these sort of projects owned 100% with no clause on it, royalties or anything else, no offtakes, that a major company can walk in and do a deal, and do a good deal for us and for them. So that's the wrap. Thank you, Peter.
Thanks, Mark. Certainly operating in the right part of the world there, and looks like plenty of upside and things to kind of follow up on. I'm going to give you a chance to wave your arms a little bit here. You've got plenty of targets. You've got 4 kilometres strike. You're going to have a resource update out soon, but I think that's only going to be part of the story here. What do you think this could sort of get to in terms of scale? What's kind of typical of what's around you there, maybe?
Look, it's a really interesting question, Chris. The initial target here is, as I mentioned, a 25-year mine life. So I think we'll do that, fairly easy. But that's sort of, that would need around a 300 million ton resource, and we can see line of sight to that with the work that we're doing. And in terms of what's beyond that, there's plenty beyond that's potential, but let's get to that first. That could be in the could be sort of the open pitable area, could be 300 to 500 million tons, and then Curiosity is a potentially massive underground play, but that's in the billion ton scale, that thing. So it's a fantastic prize to be working on, and everything we do keeps adding to it.
That's pretty significant, I think. And the second question, what are you thinking in terms of the corporate strategy to move this forward? Is it something that you'll look to kind of form a partnership, JV, bring someone in? Is there interest there, or is it something you want to try and push ahead by yourself as long as you can? What's the thinking there?
Look, the door's always open. So we have a number of site visits, and we have people in the data room as we speak. But look, as a company, we own 100% of it, and that's the important thing. So really, we wouldn't joint venture this, because we'd end up sitting there diluting for however many years it takes the incoming party. So really, the register's the way to come into it. We have considered, as a separate thing, doing a separate joint venture on Curiosity, but really the way that we would expect to do a transaction here, be a bit like sort of ATEX is through the register, where people come in through that mechanism, and we keep the ownership whole and grow the value for our shareholders. So if someone really does want it, then they've got to buy everyone out.
Great stuff. Right. Well, thanks very much for that, Mark. Appreciate that. We'll keep an eye out on the sort of resource update, drilling updates and things like that. And appreciate you joining us today. Thanks, Mark. And
thanks very much.
Hand it back to Pete. Thanks.
All right, thanks. And Mark, just a little fact there. Santiago, I believe, is a bit more like Kalgoorlie. It's really a central mining hub.
I've spent a bit of time in both, and it's a bit more like Sydney than Kalgoorlie, but no, it is a real mining country. It's a great place to operate. There's a lot of graduates coming out every year, tens of thousands in the mining industry. So getting good people to operate and work there is good. The wage structure is good, and the government's very supportive. So you can get things done there. And as you can see, they're building a mine next door, and that for their 490 odd million, they're getting a lot of bang for their buck.
Good stuff. Thank you for that pretty insightful presentation there today. Thanks for joining us.
Thank you.
We're going to wind it up here with Mr. Matt Friedman from MST, who's going to give us his overview on what he thinks of those presentations and the copper theme. Matt, over to you.
Yeah, certainly. Thanks. Thanks very much, Peter. Again, thank you very much, Peter, and obviously morning or afternoon, everyone that's listening on the line. Thanks very much for the opportunity to, I guess, join this great webinar and join the team at NWR and also obviously my colleagues at MST Access and hear from some pretty fantastic emerging copper stories. As Peter mentioned, my name's Matt Friedman. I'm a senior analyst in the team at MST Emerging in our mid-cap equity research platform. And obviously I work quite closely with my metals and mining colleagues in MST Access, being Chris Drew and Michael Bentley, who you've heard from this morning. And I guess between the three of us, we do look at a lot of companies. Obviously the ASX is blessed with hundreds of resources investment opportunities in almost every commodity and jurisdiction. And, you know, Chris spoke about why copper is an attractive commodity. And if you're a company with a copper project, of course, that's particularly helpful. But, you know, some companies will be able to create value for shareholders and obviously others, you know, maybe will struggle. And so the question is, how do we as analysts, or I guess more importantly, how do all of us as investors, how do we find the companies that are interesting and you know, pick the bottom up winners? And you know, I think for us as a team, there's hopefully, you know, three things that we can kind of boil it down to, at least as the kind of first ports of call in terms of answering that question. And so I'll try and cover off on them and hopefully keep it pretty brief. And hopefully that gives people listening a bit of a framework on how to think about some of these things. So as you'll see there, you know, number one is, to us at least, is management. Now, you know, I'm a technical guy. I'm a mining engineer. You know, any mining engineers and geologists listening might be up in arms in protest. You know, why is the management team number one? Why isn't it the deposit? You know, after all, you can't change the rocks in the ground. But as an investor, the reality is you're not giving your money to the rocks in the ground. You're giving it to the board and the management team. And I'm sure all the presenters today would agree that, you know, there's no lay down misères anymore in copper mining. The easy discoveries have been made, and every enterprise, every business needs the management team to take on some risk in terms of commodity prices, in terms of allocating and investing capital, you know, potentially building infrastructure, potentially seeking permitting or approvals. And really, you need a good management team to take what they've got in the ground and navigate all those risks and ultimately create value for the shareholders. And so it's great to hear some of the teams this morning speak about that. You know, we can probably all rattle off names like, you know, Olympic Dam, Grasberg, Cobre Panama. You know, you can go back in time and think about Panguna. I mean, some of the most geologically amazing deposits in the world, but you still, as a management team, need to work bloody hard to actually create value for shareholders. So, as I say, the first step for us, at least, is to learn about the management team, listen to them presenting their vision for the business. You know, read their bios on the website. And also importantly, learn how they're invested in the business and how they're rewarded if it's successful. Or better yet, you know, maybe just grab an MST Access research report, and hopefully that will cover off on a lot of those questions for you in terms of how the management team's structured and their experience and expertise, et cetera, et cetera. Secondly, and perhaps it's the most obvious one, but it's really what's in the ground. You know, it's the geology. And this is hopefully where we as analysts can be particularly helpful in applying, I guess, our own experience and technical knowledge, comparing different deposits to the broader peer group and the broader industry. And, you know, really, I think the thing I'd say here is it's not just about trying to find, you know, what are the sort of quote unquote best deposits. You know, anyone can tell you that 2% copper is higher than 1% copper. I mean, that doesn't take a genius, but it's really about looking for those deposits which have, I guess, the combination of factors that mean that ultimately they're more likely to make money for investors. And it comes back to, as I say, not just the metal in the ground, but also the project's financial metrics. You know, what valuation is it trading at versus what could it achieve over time? What are the technical risks and, you know, some of those non-geological potentially advantages, like is there existing installed infrastructure, processing infrastructure, export, you know, logistics infrastructure. And so you weigh up all those factors. Clearly, if there's a resource or a reserve, then you're looking at the size, the grade, the depth, the metallurgy. But that's not always the case. You don't always have that benefit. And obviously, we've talked about the Lassonde curve today already. Mining projects come in all shapes and forms. And, if there's no resource, you're thinking about things like the prospectivity, or I guess neurology, for want of a better term. Or even if you don't have that, is there some kind of credible geological hypothesis that's being tested? Is there some sort of idea about the genesis of this potential deposit that the team is exploring and investigating, or are they just poking holes randomly in untouched ground? And then I think on top of that, whether or not there's a resource, there are some modifying factors either way. So as I mentioned, clearly infrastructure is important, path to market, and we've had some presentations from companies in all sorts of different jurisdictions as well, and that's something that needs to be considered. As Chris alluded to, we've also got a bit of a spectrum in terms of where the projects are in terms of development phase. We've heard from some brownfields type, restart type projects. We've also got greenfield opportunities out there in the investment universe. And often I think you can say that brownfield's probably easier than greenfield, at least to, I guess, get a sense of what the risks are and maybe to infer the value. It doesn't mean that one is better than the other, but it can certainly be easier to get a sense of, I guess, the project metrics and the risks that are associated with the brownfield restart. Whereas a greenfield project, you've got effectively a blank slate to work with in order to create value. So another thing to consider there. And then finally, and it was actually great to hear, I think almost all of the presenters we've heard from today to talk about this in one way or another, but it's really about access, thirdly, about access to capital. I've heard it said that a mine is like a boat. You've probably heard that old idiom that a boat is a hole in the water that you throw money into. A mine is a hole in the ground, literally, that you throw money into. You've got to do drilling and then studies and then more drilling and then more studies and then permitting. You've got to actually build the thing, and then you probably want to drill it again, and then you're ramping it up. So you've probably drilled the thing 4 or 5 times before there's even any risk of shareholders getting some kind of a dividend out of it. So you have to be very confident that there's going to be a pipeline of capital there that the enterprise is going to have access to be able to continue to progress the project, continue de-risking, and continue creating value. And in some commodities, that's just going to be easier. There's a chart up there in the corner that I guess shows the kind of pace of financings across the whole metals and mining space. And the reality is that gold is pretty easy from a financing perspective. Banks, off-takers, equity markets are pretty comfortable with gold as a commodity, and thankfully also copper is pretty easy as well, as we've heard some of the presenters talk about in terms of the myriad of funding opportunities that are available to them. So if you start introducing other product streams, that can get more complicated, and that can maybe restrict the scope of potential partners that might want to be involved. But in terms of what we're thinking about, it's about, who could the potential partners be to enable ongoing funding for these projects? Is it banks? Is it corporates? Governments? Who are the natural and likely partners in that jurisdiction? And if it all comes back to equity holders or shareholders to continue funding project development, that's fine, and it means that shareholders retain full ownership. But there needs to be a clear pathway into how every incremental dollar is going to deliver the plan, de-risk the project, and ultimately, drive a re-rating and create value. So, as I say, thirdly, access to capital. Can the project support partnerships, maybe sell downs, off takes, as we've heard alluded to, debt, etc. And is that going to deliver on the pathway to re-rating the project? So look, hopefully those 3 things, provide a bit of a quick checklist that we as analysts, can think about when we're hearing a new story. Hopefully for any investors or other listeners on the line, that's provided a bit of a framework to think about. And obviously, if you're interested in doing more work on some of the stories that you've heard today, I'd certainly encourage you to grab one of Chris or Michael's MST Access research reports and have a read. And I'm sure they'll cover off on all 3 of those points that I've just been talking about.
Thanks very much, Matt. I think that's a great framework for people to think about when they're looking at these stocks. I'd probably add, personally, I'm a big fan of the brownfield projects. I think that often does some significant sort of de-risking from both the technical perspective and generally you end up with a lot lower capital intensity as well. And you probably heard of that come through in a few of the names today with Orion, Cyprium, and Hillgrove. So I think it's a great way to wrap up the morning. So appreciate that, Matt. Thanks very much.
Thanks, Chris. Thanks, Peter.
With that, everyone, we can wrap it up. Really appreciate your participation today. I think we've heard from a great range of companies. Hopefully, something for everyone in there. Appreciate the opportunity to work with Pete and the team at NWR as well. And I'm sure we'll be bringing more of these sorts of opportunities to have a listen to. So, from my perspective, that's a wrap. Thanks very much, and Pete, over to you.
That's pretty much the same from me too, Chris. Thank you to everybody's input today. Thank you for our audience. If you have any questions, please send them through to either Chris at MST Financial or myself at NWR. We'll make sure the presenters get your questions. There were some outstanding stories here today. I've taken lots of notes myself and looking forward to getting on the screens and checking them out. So we look forward to seeing you all in the near future. Thanks for attending today.